Hey everyone, it's Rod with Power Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. Today is Wednesday, June 21st. Hope you're well and happy hump day. In this video, going to be discussing Organigram's confirmed reverse split. It's going to be on a 4-to-1 basis. I'll also bring up the chart and I'll do some technical analysis and what we can expect in terms of price action over the next few weeks and months. But before we get to it, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell, you'll be notified on any future videos or when I go live. And before we jump to it, 500,000 views closing in on it here on the channel. So first and foremost, thank you very much. I'm extremely grateful and thankful to each and every one of you who have supported me along the way. It definitely means a lot. But moving on, here's the article from MJ Biz Daily. Canadian MJ operator Organigram consolidating its shares to stay on the NASDAQ. So we know that this was probably going to be the case. They received the warning and they've been well under $1, and it looks like it could go even lower with some bear flags on the chart that we're watching, which I'll bring up here in just a moment. But we are seeing some signs of hope on the weekly time frame and some of the macro indicators, which we'll bring up here in a moment as well. But I'm in the camp of thinking that we could see a little bit more short-term pain, at least for the next month or two. And then, maybe we see another leg down or we go sideways and see a little bit more pain. I'm kind of in that camp. And then leading into the fall, I think we could see some massive upside in MJ. But here's the details. Canadian MJ cultivator and manufacturer Organigram Holdings plans to consolidate its shares on a 4-to-1 basis in order to maintain its U.S. equity listing on the NASDAQ exchange. Organigram was warned in January that its share price had fallen below $1 minimum bid price requirement for 30 consecutive days and risked a possible delisting. So this is a very common affair right in the MJ space right now, especially for Canadian LPs, because the US MSOs, the producers in the US, aren't listed on the US major exchanges, so they don't have to adhere to the same policies and compliances. So this is the reason why we're seeing it mostly with the LPs, right, with the Canadian producers. And the US companies as well may have to go through the same sort of rigmarole as well and face the same problem depending on how the share price reacts after they uplist, right? But obviously they would see massive upside, but as we know, Truly went from $60 all the way down to $5. So anything's possible, and Tilray itself went from mid-60s all the way down to $1. So anything is possible. Never say never in the finance world. That's one thing I've learned a long time ago. Organigram shares have lost value since then, opening at 40 cents on the NASDAQ on Wednesday. The share consolidation is also meant to reduce volatility and enhance the marketability of the common shares to institutional investors, which is usually a common thing with a reverse split. Organigram said in a news release, the reverse share split is expected to take place on July 7th. So if you're wondering when, you should wake up on July 7th. Don't be alarmed. It will be marked for that date, and it will also affect Organigram shares listed on the Toronto Stock Exchange, so TSX in Canada. Both exchanges have approved the consolidation, and Organigram isn't the only MJ company to face issues complying with stock exchange requirements. Hexacorp consolidated its shares. We know Aurora did, and now it's going to get another warning, potentially even CGC's below $1. So Canopy Growth, who would have thought Canopy Growth could potentially be eyeing a reverse split? There's tons of companies. VFF, there's no shortage of them. Like I said, there's tons of companies that have done it. High Tide's done it. So it's just, unfortunately, it's the lay of the land until we see massive catalysts. In my opinion, full-blown legalization in the U.S., that's probably less likely to happen anytime soon, right? So we would expect, maybe 280E tax break or safe banking, uplisting the NYSE and the NASDAQ, MJ Act review here in Canada, legalization of medical in the US, and HHS review and rescheduling or possible descheduling. That would be a massive catalyst that would knock us out of this bear market. Aurora, MJ, also another company. So yeah, it's been brutal, but unfortunately it doesn't matter if it's a Canadian company, a US company, a retailer, ETF, everything's down 80 to 90% from February 2021 highs and all-time highs. Another Canadian cultivator, Canopy Growth, was recently cut from the benchmark S&P TSX Composite Index. A lot of people thought they were getting delisted from the TSX. It was just from the S&P TSX Index, right? So similar to like the S&P 500 or the SPY, right? Or it's just an index. It's not the actual exchange, although its TSX share listing remains intact. So glad that they cleared that up, because a lot of people, I got a lot of messages about that asking, is Canopy delisting from the TSX? It's like, no, it's just the composite index, right? So Organigram posted a net loss of 7.5 million Canadian dollars for the quarter ended February 2nd on 39.5 million Canadian of net revenue. And we'll take a look at the chart here. So we did have a weekly bear flag. So we had the high, low, and then you just move that out to the 0.32 Fibonacci, and that gives you your measured move. So we were targeting, it said, about 44 cents on that weekly bear flag, which we have met that target already, and we hit a low of 37 cents actually. So technical analysis is just a guide, right? It's a way to have an edge, and it was saying that we could go lower from here, and that is exactly what happened, but we actually went lower than the target. So again, just because we have a target doesn't mean that it has to hit that target absolutely, but sometimes it can miss it and get very close, or sometimes it can overextend it and actually go even lower. In this case, it's going even lower. And unfortunately, don't hate the message or hate the message, but I'm just relaying the message. And we could see a daily bear flag here. So we're looking at the high, low, lower high, anything under the 0.32 fib there on the daily time frame at 43.5 cents was a potential daily bear flag. So we did get as high as 44 cents, but I would still consider this at risk of a daily bear flag. So in order to confirm this daily bear flag, we need to lose support there at 37 cents. If we lose 37 cents, we confirm the bear flag, and it says here we're targeting 30 cents, which again is why I'm thinking we could see a little bit more short-term pain before we see a massive rally into the end of the year and into the fall. But in order to negate this, I think we need to get over 45 cents. If we can get over 45 cents, I think crisis averted, and we're probably going to hold that low there at 37 cents. But again, if you're looking for some direction, I think it's very possible that we could see 30 cents. And a lot of companies in the MJ space are probably going to go insolvent. Fire and Flower, there was some news about that. Group opposes fire sale of troubled MJ retailer Fire and Flowers. There was a stalking horse bid there from Kushtar, which I mentioned would more likely happen. Maybe even High Tide could step in, or SNDL, but just speculating. And there could be even more insolvencies and bankruptcies in the space. So that would be short-term pain. We know there's hundreds of millions of unpaid federal excise taxes here in Canada. Even in federal taxes in the US is definitely ramping up. So I think there could be a little bit more pain, unfortunately, but again, it'll just be an idea, an opportunity and a trade idea to potentially go long and play off of those support levels. So watch for 30 cents to act as very strong support, in my opinion. If you're looking for a swing trade, that could be a nice level to target. But if you're looking for long-term entries, this isn't financial advice. This is for entertainment purposes only. But OGI, just like most names, from its highs of February 2021, is now down over 90%. So it's down almost 95% actually. So in my opinion, I think Organigram is going to be here for the long term. And I think it's a great company to invest in. Like I said, I'm a shareholder. I believe in the company, and I think that it's going to be one of, if not top 5, maybe top 10 companies globally in 5 to 10 years from now. And that's going to be the struggle, right? Finding companies that are going to stand the test of time and that are going to be here in 5 to 10 plus years. But on the weekly time frame, like I said, we're starting to see a bull cross of the MACD, which is really, really promising. And then we're already bullish on the stochastic. We just need to get a 10-week moving average candle close over that. So if we can see a weekly candle close over 46 cents USD on the NASDAQ, that would be a huge momentum shift back to the bulls. And we do have a lack of resistance there until 82 cents, which is the 50 weekly, and then nothing until 131 on the 100 weekly moving average. So we do have some runway if we can start to get a close over that 10-week moving average there at 46 cents, and then 50 cents psychological will be a strong barrier as well. And we also have the 50-day moving average there at 48 cents. So I suspect 50 cents to be strong resistance. Then we have the 100 there at 61 cents and the 200 at 78. So it's possible that we see a golden cross over the next few months. But again, we're so far away from the 50 and the 200 that in order to see a golden cross, we'd have to see the 50 cross below up through that 200-day moving average, that green line. So the blue crossing the green would be a massive momentum shift and golden cross, meaning we could see a lot of upside. But you can see how far away they are, 40 cents, 48 cents, and then 78 cents respectively. So we're at least 2 to 3 months away before we see that happen, in my opinion. Could we see a huge fast move to the upside based on a catalyst, safe banking or rescheduling? We know that HHS wants to get a decision by the end of the year. Absolutely. But I think it's still going to be at least a couple months before we see golden crosses across the sector. And as we know, we need to see all of this across the sector, not just one name, not just in the Canadian names, the American names. We need the whole sector. The whole sector moves together, not down to the day, the second, the minute, but on a monthly and a yearly time frame, the charts all look very similar. And we need monthly uptrends across the board. We need golden crosses as well, in my opinion, and then a lot of some weekly candle closes over the moving averages. But let me know what you think in the comments below. We'll continue the conversation there. Thanks again for joining us on The Pursuit of Wealth. It's Rob with Powell Group. Have a great night. We'll see you on the next video.